we have with us Mr. Praveen Jaipuriar, the CEO at CCL Products, joining us on the show. Hi, good to be speaking with you. Thanks so much for making time and speaking with us, Praveen. That's the first question. The 10 to 20% volume growth and the 20 to 30% value growth that you had, guided for the full year. Are you on track with that, or you're likely to better that given the kind of performance that we have seen in Q2?
Good morning, and thank you for having me here. We are on track for that. I can't say that we will necessarily better that. We are trying our best, but considering the market volatility and the situations, we probably are sticking to our guidance that we had given earlier.
Sticking to your guidance, but help me understand, Praveen, historically, is second half of the year better versus the first half, or is it more of the same? And how are you expecting this second half of the year to really pan out?
Initially, we used to see a little, uptrend, a little bit of a higher sales in the second half. But in the last 2 to 3 years, we haven't seen that trend continuing. We see almost similar sales in all the quarters, and that is also to do with the fact that most of the buyers would they start or let's say building inventory before the season comes and all. So we haven't seen now much of a difference, maybe a little bit here or there, but not much. So that's on the side. Demand generally we have seen, because a lot of our demand or a lot of our exports come from European markets, American markets, where the consumption is really throughout the year, unlike some of the economies in Asia, where we see a little uptick during winters.
A lot of domestic products, especially in the category of instant coffee, if I may use that category. How big have these brands become in India for you?
So the branded business is doing well. The India business, we clocked around 200 crores revenue in the first half, out of which 65 to 70% would be brand. So we are 135, 140 crores of brand sales in the first half, and we are expecting to close the year with approximately 300 crores, which is up from 200 crores last year. So that's a segment which has done extremely well for us in the domestic market.
Would you call yourself as a co-packaging company, as a branded player, or as a simple B2B supplier?
Primarily all of them. We started as a B2B supplier and then went on to become a co-packer as well. So we started doing a lot of small pack private labeling for a lot of our clients, and 6 years ago we started our foray into B2C, which is our own brands into India, and in good short time we have been able to create a good value. So as we stand today, yes, each of these segments have their own businesses, and the branded business is still very small when I compare to the B2B stroke private label business. But we are firmly now established as a company which straddles both the verticals, B2B as well as B2C. And the B2C vertical, now we are aggressively expanding, now not just in India, but now we are looking to expand our B2C vertical in some of the locations across the globe also. And that's the reason we went ahead and did some acquisitions in UK to make sure that we keep building on this vertical as well as we go along.
Praveen, morning. What about the fact that, just in general, given that the coffee penetration in India is so low at about 25%, is that not a worry for you? And how is it that you see coffee prices as well trending? How is that going to impact your overall margins?
So not really, it's not a worry. Actually, we see this as an opportunity. Because if you see the global market, generally the coffee consumption has been largely in Europe and in America. These are the large consumers of coffee. But of late, what you're seeing is, some of the developing economies, the trends are reversing. So you can see how economies like Japan, Korea, turned from a tea drinking nation to a coffee drinking nation. China is on the cusp of, that conversion. And India will follow suit. And what we have seen is that generally, any food category, and especially beverages, you see a lot of consumption that starts out of home, and then the penetration starts in home. So there'll be a decade and a half of out-of-home consumption. You're already seeing the number of coffee shops that are mushrooming by the day. around us, which is a very good indicator that the youngsters today are started to drink, coffee, and their, choice of beverage will be coffee in the future. So we are very happy that the penetration as of now is low, but it is fast catching up. And markets like China and India will be the consumption driver for coffee in the years to come. And as far as margins are concerned, on the B2B side, we work with a cost plus model. So we make sure that our per kilo EBITDA margins are intact there. Yes, we are trying our best to make sure that how do we premiumize, how do we add more value in terms of, doing more small packs and also that our margin profile improves over a period of time. And of course, as we build the branded business, while currently we are investing back whatever we are earning there into brand building. But this is a vertical which we all know that in the future will give us better margin profile.
All right. Thank you for joining in. It's been interesting getting a take from you as to what the outlook is. So yes, on track to achieve the volume guidance. The 300 crore revenue is what they're aiming for by FY25 end.
If you like this video, then like, share and subscribe to ET Now.